Quick question. If you're putting 20% down payment, do you think you automatically get the best mortgage rate? Most people do, but here's what the banks don't tell you, and it can change what you pay. Now, this matters for first-time buyers, move-up buyers, downsizers, and even people with an upcoming mortgage renewal. CMHC reported that in the first half of 2025, chartered banks did far more uninsured purchase mortgages than insured ones. That's roughly $63 billion versus $24 billion. So it's not a niche topic, it's more of the market. In Canada, if your down payment is under 20%, mortgage default insurance is typically required. And there are rules around price limits and other criteria set by the insurers. That insurance changes the lender's risk, and that changes pricing. Most people only hear two labels. There's insured, which is less than 20% down payment. You pay the default insurance premium, and lenders often price these better because the loan is insured. Then there's uninsurable. You might have 20% down payment, but the mortgage doesn't fit insurer rules, like certain price points, longer amortizations, refinances, or even some property types. When it's uninsurable, lenders carry more risk and funding costs, so the rate is often higher. So if insured is one end and uninsurable is the other, what's the middle ground option that almost never gets explained clearly? I worked at a bank for nearly a decade, and one of the biggest gaps that I saw was that borrowers were told high ratio insured or uninsurable, but not whether or not their deal was actually insurable behind the scenes. It's called an insurable mortgage, and here's the non-obvious part. 20% down doesn't decide your pricing category. Your structure does. If your mortgage fits insurer rules, even with 20% down, the lender might be able to insure it at their cost and price it closer to the lowest rates. That can mean a better rate without you paying the typical borrower insurance premium. So the smartest question to ask isn't insured versus uninsurable, it's is my mortgage insurable or uninsurable?